Kirk, you know what? Really a good timing to have you here with what's happening to the oil market. How have you been, buddy? Well, there's your headline. Did this surprise you?
Well, what do you think? I've been talking about this for a long time, that the Fed is not battling inflation in general. The Fed is battling inflation from OPEC, Russia, and China. This is geopolitical, and it's going to stay geopolitical until the election.
Okay. All right. It's like Saudi Arabia, the deal that when China came over. How do you see that with them trying to negotiate at least some type of diplomatic relationship between Saudi Arabia and Iran?
We'll see, right? They've been working on that for, I don't know,
Is this a year?
1,800 years?
Yeah, but we've been talking. Yeah, you mean that relationship?
Right.
But yeah, but if they're both in with China now, don't you think the Saudis have, you know, switched allegiances pretty much 100% towards China?
I think that Saudi Arabia does what it needs to do to make more and more money. So whatever way the wind blows for them making money is the way they're going to go at the moment.
Okay.
Iran needs a patron more than anything. So they'll also go to who's the strongest. If you read Foreign Affairs or any of the other geopolitical mags, it's pretty clear that Saudi Arabia has always been in everything for the money, and they have a big fear of Iran, so they try to figure out a way to not have that war. And Iran is just, frankly, under the mullahs, they're so weak that if Iran can't get protection from China or Russia, they'd probably be in big trouble, because if the Israelis ever really decide that they want to get rid of them.
Yeah, doesn't Netanyahu need a distraction now?
Who knows? He needs a lot of distractions as far as I'm concerned.
All right, Kirk. I thought I would just, see if you were going to, something you talked about early on with me was a war there with Iran.
Yeah.
So, it hasn't happened doesn't mean it won't happen. It's like the people who said the VIX was broken before it went from 18 to 31 in a week.
Right.
So, so let's get to the financial aspect of it. It certainly doesn't make Paul's job easier.
No, and that's actually what I've been talking about with my subscribers for a year and a half, is that everybody wants to talk about the monetary inflation because we overdid the bailouts for COVID, which I have arguments for why they did it. I don't think it was stupidity. I think there were specific goals. But to fight rising inflation from energy, which is being used as a weapon, to influence our elections, how do you do it? How do you fight back? And the only thing you can do is pass massive incentives that really are going to benefit the oil and gas industry to produce more alternative energy, to do carbon capture, to really incentivize oil and gas production in line with alternative energy production. I don't think people understand that the IRA isn't just about solar and wind and batteries. It's really good for Occidental and Chevron and, and Exxon and some of the other bigger company, Conoco. Conoco just got the deal in Alaska. So we're in a bridge period. We know that there's not really any growth in oil demand anymore. And how does the price go up then? Well, it's because they control the supply side. And how long can that last? It can last a few more years, because we're not going to have enough alternative energy in EVs until middle to later part of this decade to really spur, a permanent drop in oil prices. So, I've been talking to you about this since 2017. That's why I brought this up. Is you were right. Some of our early conversations were about how oil was going to have a pretty significant bull market during this transition period. And the transition period is going to last several more years. I don't think it's great for the frackers because they've high graded so many things that, their fields that, it's going to be hard for them just to keep up. But your integrated Chevron, Occidental, suddenly they're pretty attractive. And I've been loading up on Occidental for a year. So, what's going to happen with the price of oil? You got to take a look at it in time frames. Longer term, oil crashes at some point. Next year or two, I think it's going to be pretty strong. So, there's your trade.
They'll squeeze us for all they can get. So is,
they've told us that.
150 coming?
I don't think that American consumers would continue to drive like that to really supply
destruction.
Yeah, for sure. There's going to be demand destruction.
It almost feels like the embargo from the 70s.
It is. We've talked about this. That's exactly what
I mean, it feels just like an OPEC embargo, and except, they're cuts, which say, all right, you could have some, but it's going to cost you. It feels like the 70s.
Right.
And what are we going to have? Gas lines again here?
Nah, that won't happen. So right. What's the incentive creation for supply? Higher prices.
Let's go live in the future now.
Okay.
All right. So here we are. This happened today. It's one of the biggest price gaps I've seen in crude from a Friday to the Monday in a long time. To me, it's a pretty I'm not going to fade a signal like that. So what do you do right now with, I noticed, does this build your case for what you had on a prior slide, that you're not ready to get into equities until people throw in the towel, and you still think there's a capitulation decline? Could this be part of the puzzle that makes it manifest?
So there's been so much liquidity in the market. And in the last 3 years, you've had the number of traders in the market roughly double, right? So you have all these folks, Blake's age, decide that they're superstar traders. I love Blake. I think everything he said in that last segment was about right.
How old is he?
I look at his picture. Isn't he like in his 30s?
He's 18.
I'm 50.
But you're 50?
You. Yes, I am.
You're a good looking man.
Oh, thanks. That's what my wife thinks.
Well, you got her fooled.
The dating game.
Man, I've been literally trading more than half of my life now. So
have you?
Yeah. And
but thanks, Kirk.
Trading,
I'm glad you think I look 30.
These could be old pictures too. My old pictures from my headshots from 10 years ago. So
that's what you use on dating sites, online dating sites.
Oh yeah, that's right.
And then you meet them and they say, "Hey, who are you?"
Well, so
anyway,
so I finally got somebody to swipe right, and now I'm marrying her. So there you go. It was one in a million.
Yeah.
Good, but so I think that there's a lot of pictures emerging here, and the surprise that the traders are going to have to watch out for. And I don't think it's imminent, but at some point, just understand that the big secular trend is that we are in the end of the oil age. What inning? I don't know. Second, third inning, whatever it is. It's not. It
makes a difference to know what inning you're in.
That's right. So way back here, I'm pointing at this chart. After OPEC flooded the market with oil, they ended up killing, over 200 U.S. oil and gas companies over the course of through COVID. And, COVID was, you can have your conspiracy theory there. I mean, I'll just go with it happened. And, you have a lot less oil production capacity in the United States now than you did. And we're still setting records, but either this year or maybe it's next year, we're about to start seeing oil supply decline in the United States in the next couple of years. And so where is more oil going to come from if it takes a while for demand to turn over? I think the answer is very simple. Supply demand curve is that you have lots of oil in the world. There's no shortage of oil, given what we need for the next 100 years plus. You're going to see Saudis keeping the price of oil up, but that's going to incentivize other countries to pump their oil. And you're already seeing it in Africa. They're trying in Venezuela as good as they can. And, you got Exxon off of in South America pumping oil. So you take a look at this and you're like, okay, what is the dynamic here? Well, the dynamic is you're going to get panic pumping. Everybody's going to pump their oil as fast as they can in the next several years. But between now and then, man, that's a heck of a bullish trade in oil, because I don't know that the Fed can do much more. If they tighten up more, you really just cause a horrific recession. It could be stagflationary. There's a lot of bad things that can happen. I think.
Well, you say you're looking for one more capitulation decline. What's going to be the catalyst for that?
I think that the soaking up of liquidity by the banking system that has to bail itself out, because they're letting the stock prices go to zero. So these bankers, they're not expecting. I think SVB was a big deal. I think that Signature was a big deal. The fact that they let those shareholders go to zero, a lot of the bondholders go to zero, and the executives being told, we're taking all your money back. If you're a banker, you're like, well, I better fix my bank. So that's going to soak up a lot of liquidity. Powell talked about it in the last meeting. I think he's right. I think if I'm the Fed, I pause in May. And I basically double dog dare OPEC. Hey, if you want to be the bad guy on inflation, thank you. We'll put that all over you. You're cutting oil production. It's your fault that there's inflation. If we get, inflation over the summer rising again, the year-over-year comps are kind of starting to tell you that we could see energy inflation and inflation in general jump up again. So I think that if I'm strategic, I'm tactical, I take a look at this as Powell and say, I don't want to destroy the economy. I want to stay near full employment. We'll just blame Saudi Arabia for inflation. And I think they'll be able to do it. The conventional wisdom is that he's going to have to keep raising now. And I've never been much for conventional wisdom.
Okay. What do you think about this move in gold?
Well, funny you should bring that up. So we talked about this as well. Early in the gold move, which I started buying gold back in 2018 again after selling it in 2012 or whatever. But, my history with gold goes back to 2000. A client talked me into it. I bought it in 2000, 2001. Wrote it to 2012, sold it, wrote some articles on Market Watch making fun of the gold bugs. Gold collapses, around 1300, I start buying it again, 1200, whatever it was. And here, right before COVID, right? And COVID's changed a lot of timelines and a lot of intensities. I think gold for sure goes to 3,000 an ounce in the next several years. And it's not so much because of anything that people really focus on, supply and demand. There is a shortage of gold developing, right? It's just harder and harder to get gold. Yeah, it's really hard to get gold and demand's not going anywhere. So until we're, and I mean this literally, until we're pulling gold off of asteroids, there's going to be a supply and demand imbalance with gold. And that's just going, excuse me, I got excited.
I remember we were doing a broadcast near the bottom in COVID, and you were talking about buying GDX. Thinking about buying it. I said, well, just buy it.
Yeah.
And that was a low of the move.
Yeah, I bought it on air at the bottom.
Yeah.
I was
Well, I
clicking
had
away.
to tell you to do it. You were just
Yeah,
looking
yes,
at
it was all you.
You needed a push.
I wasn't
I could
prepared.
tell you were tentative. You know, I'm looking at it. Well, you could look at it. You got to buy, not just look.
Yeah, you got me. You got me. Yeah, here. Can you hear that? I was clicking.
You didn't never even wired me my my fee for helping you on that trade. Anyway, look, you're on your own from now on, and you'll do fine. How do we make money on the capitulation move in the market, and when's it going to happen?
So one of the things we talked about a while back was follow Apple to kind of know what the market's going to do.
Oh, that's cool.
All right. So, since 2018, 19, Apple and the S&P 500 have basically been mirrors of each other. It's just that Apple's the better part of the mirror, right? This is the crummy part of the mirror. But every move kind of mirrors each other. And right here, where was it? Right here, wherever our last interview was, we said that Apple had some ways to go down, and it did. It dropped like 7 or 8% in the next couple of weeks. And now it's been on this tear since the start of the year. It's pulling the S&P 500 up with it. I think that if you are a trader, all you have to do is watch Apple to know what the S&P 500 futures are going to do next. That's all you have to do. And it'll be, you'll get a day's notice. And if Apple just keeps pulling in money, S&P 500 is not going to collapse. But if money stops going into Apple, right? I mean, I do a lot of volume weighted analysis. That's what I look at. I look at those quant numbers on volume and dollar flows. If Apple can't pull in money, then nobody else can. That's it. The bear market.
How's any of that actionable? I mean, can't you say something like, there was a triple top at 156 and it's trading above it. And if we got back under 156, it would negate the breakout. And that would be a pretty good bellwether sell for the market.
So you can see the trend line right there, right? It looks like it wants to turn over. But Apple has looked that way a bunch of times.
It could keep going. I'd rather see it do something wrong to go with it, right?
Yeah, I think all the things that you talk about on the technical indicators are right. I don't think you're going to get more than a day's notice, though, because it's going to come down to, does liquidity keep drying up? Now, I think it's going to. That doesn't mean it will.
Yeah.
But I think liquidity does what liquidity does, and then the market follows liquidity. It's been that way for 25 years of my career. If liquidity goes up, market goes up. Liquidity goes down, market goes down.
What's China going to do when the Taiwanese president meets with Speaker McCarthy in Los Angeles on Thursday?
They're going to call us irresponsible. But I don't think that we're going to have World War III. So
okay, I'm not saying World War III, but you're saying no price, no retaliate. They're not going to retaliate. It's all going to be just verbal threats.
It's hard.
How many times can you poke a tiger in the eye without expecting him to, swing a paw at you?
Pretty many.
Yeah. Okay.
Yeah. It's just, look, they are trying to influence our elections to get people who will capitulate to them and gravitate towards isolationism. That's what they're doing. And at some point, look, the United States is stronger. It doesn't matter. The West and the United States are stronger. And the only way for China and Russia and Saudi Arabia to make more money and stay in control with their autocracies is to try to disrupt us on the electoral side. Can they do it? Maybe. I mean, Trump got elected. So what will happen?
Will he again?
Nah, I don't think he'll even be the candidate. But, maybe he'll run his third party. And then for sure you get a Democratic president. So we'll see. But, in the long run.
Very sanguine today.
Yeah, well, it's just I've
It's
seen
like
this stuff so many
Yeah.
times. You
Everything's good.
don't you look at this stuff and you think, oh, I've seen this before. I've played this
Mm,
game before. You know, I mean, the long-term stories don't change. You know that. I mean, it's just everything in the middle of the market that you can trade back and forth. I'm more of a Paul Tudor Jones guy. I like to trade the pivots. I don't know that I see a huge pivot here. You know, I think we might see the S&P 500 go down to the 3,000 if just everything goes haywire. You know, and I think that's what Russia, OPEC, and China want. But if I'm
isn't that
Powell,
what the Fed, isn't that what the Fed wanted? I mean, they were targeting the market.
yeah, for sure.
And they never really got it down to where they thought they needed to bring it before this happened. Before things.
Right. So, you know, I forget who said it, but when the facts change, I can change my mind.
Yeah.
And
W.D. Gann.
so I've been thinking about this. And I asked the question while it was happening 3 years ago, why are we creating so much liquidity during COVID to the point where we probably created double to triple the amount of money that actually left the economy at the time? I mean, we really overdid it on stimulus and bailouts and everything else and monetary policy. And so you ask yourself the question, are they all dumb? Or did they have something in mind?
Yeah.
I think they had something in mind. I think they pulled forward money from the bailouts of the future, and they wanted a smoothing effect during this energy transition, which is the biggest thing in the history of the industrial world. You know, I don't think everybody really understands the changing the energy system over a decade or whatever it's going to take is the biggest thing that's ever happened.
Hey,
So,
Kirk.
yes,
Steve here. There is a third alternative, if I may add.
Okay.
The third alternative is always the easiest explanation, in my opinion, which is, you know, we've been having this problem for decades, right? It's the political cycle. Unfortunately, the incentive is for everybody to make things easier for themselves in the short term,
For sure.
to maximize the re-election chances. So there isn't necessarily a longer term plan. In my opinion, unfortunately, very frequently we see problems arise from the opposite, that everybody's plans are short term and nobody really cares to do what is good in the long term because they won't reap the benefits of it, politically speaking.
I think on the politician side, that's very often the case. And it's probably the majority, right?
Yeah.
So it's a matter of, you know, and my name is on a couple papers that made it up to the Pentagon. You know, I was just a guy carrying the coffee, but my name still got on there. And I'll tell you, there are long-term plans and there are long-term ideas, and there's all kinds of academics and all sorts of bureaucrats and all sorts of military people who think about this long-term stuff all day, every day, 24/7, 365. So even if Marjorie Taylor Greene is just trying to get rich or you know, pick your Democrat, it doesn't matter. At some point, the long-term plan is there. And I don't think that necessarily the Congress people are who you should base your long-term ideas on, because they come and go, right? They die too. And if I'm a betting man, and I am, you know, I play some professional poker, I would say that the long-term secular trends are for an energy transition, for the dollar to get stronger, stay in a stronger range. And the only reason that people talk about a dollar collapse is because we spend like drunken sailors, and we did it because we needed to keep the dollar down. The dollar has so much inherent strength that the only way to keep it down is to spend stupid. So we do. What happens as the millennials are going into their peak earning years with the US budget? We're going to see a move towards a balanced budget by the 2030s. Every single chart shows it. There's very minor tweaks that we have.
I really hope you're right, because it's totally needed.
Well, how strong do you want the dollar to get?
The question is, I mean, I would ask a different question. For how long do you think it's sustainable running this type of deficits without the global economy losing trust in the US dollar if things don't change?
A really long time, because there's not an alternative. Although there is one alternative that I really like, and you know which one it is. I think Bitcoin's going to 6 figures.
Okay, let's see.
You know,
I have one question for you, Kirk. With all these balloons that have been flying around all over.
one of them was mine.
I figured. So I wanted to ask you, wouldn't you like to ride in a beautiful balloon way up in the sky on a beautiful balloon? Huh?
There you go. I'm going out to California. I'm going to Sonoma. I might actually do that.
Okay. So. All right. Anyway, best idea for the next quarter or two, and then I'll let you go.
So
a lot of hot air to
yeah, I like Bitcoin. I think the easiest trade, I think the absolute easiest trade
just
is
be long oil.
No, Bitcoin.
Oh, Bitcoin.
It's absolutely the easiest trade. And I was pounding the table for Bitcoin the last couple times we talked in September and December. And it's up 40%. Look, Bitcoin is getting adopted by the emerging markets, by the American enemies, and by the very rich. That's plenty of demand for Bitcoin, and they don't make more of it, really.
Okay. Do you own any?
I don't. Yes. When I win poker tournaments online at a website that will remain nameless, I put it all into Bitcoin. So I've been accumulating Bitcoin for 3 years, but I really try to play more poker when it's down.
Would you buy more at 14?
At 14,000?
Yeah.
I was buying it in the teens when we talked.
Well, would you buy more if it got there again?
Yeah, and I don't think that's going to happen. I think you've seen the low. I think you've seen the local low on Bitcoin. I think that we were talking in 3 or 4 years or 5 years, we're going to be talking about a 6-figure price on Bitcoin. Yeah. The adoption, the supply demand.
Okay.
I have tried to come up with bearish arguments for Bitcoin.
You're all right. How about this?
And I'm not a maximalist. I'm not.
Right. How about this? There are very few. I don't care. Put a title up on a different title on the chart, and there are very few markets that come off a serious seismic decline like Bitcoin did, rally and never have a retest of the low. And I'll rest my case on that.
I think that what you saw was the retest of the low.
Okay, it only hit it once and got quiet for a few months.
It was down there a couple of years ago.
I'm talking about retesting what happened for this move. So
anyway, didn't it chop along for market? But didn't it chop along for months?
Months and months. Yeah, it was.
Yeah, so I mean, I would consider that a retest. It was just it bounced in the teens forever.
All right.
Honestly, I'll just tell you, I understand that people don't understand Bitcoin, and I spent, 6 years studying it, and I wasn't a believer. I didn't think it would adopt. It's adopted, and it's going to adopt more. It is purely an adoption story that influences supply and demand. The CTFC, that was your validation when they made it a futures tradable commodity.
Okay, well, I think it's going to be a foster child for another 4 months. And if you get that washout in the market and you get the strong dollar that you're talking for, that it's a wrecking ball for everything, and Bitcoin will feel the pressure from all of those things. And we'll see what happens, because I'll be talking to you in about 90 days. We'll know by the summer, bro.
I believe that the dollar is a wrecking ball, which is why I say that we've deliberately held it down for decades.
Well, it's about
And
to roar its head again into the summer, whether
it
it's
could.
bottoming here or making one more low.
But this guy right here,
Yeah.
remember, he's taking his marching orders from somebody. He doesn't come up with this stuff on his own. He's not an economist.
Yeah.
Right.
He's taking it from
he's
what are they? The Bilderbergs
somebody
and the
he,
Trilateral Commission and
well,
Rothschilds
or the president,
and the moguls in Hollywood.
Right. Or the president.
And the John Birch Society.
Well, look, he's a lawyer. He's somebody's mouthpiece. He does the best he can to regurgitate what the people tell him to say. And so you better believe that the Fed's marching orders are coming from somebody else. I think that they pause between now and Labor Day. I've been targeting Labor Day. You know, I knew that there'd be something going on with oil going into summer driving season. I've been talking about it in my webinars, you know, for months that it was coming. People didn't believe me. Now today they'll believe me. And we'll see what happens on the next trade. You know, you guys are much better at the short-term trades than I am. You know, I'm more of a pivot.
Better.
I'm more of a pivot guy. I'm not a good short-term.
Yeah, you're like a John Tudor Jones.
That's what I try to be. Right.
You're like, you know, you're an inflection point guy.
Yeah, I try to be Peter Lynch and Paul Tudor Jones. But I
don't you want a little Kramer in there?
Little who?
Kramer
from Seinfeld?
No, Kramer from, you know.
Oh, Jim Cramer.
Yeah.
I watch him once or twice a month for comic relief. You know, I pour a little bourbon.
You're in that opposite hedge fund of his. All right, well, bro, we'll see what happens. Have a great spring.
Right. You too.
I'll catch up with you in the summer.
I'll have some engaging news the next time.
Yeah, I think it's really going to be an interesting period between now and the summer.
Well, I meant that I was going to be engaged by then, but okay.
Well, congratulations.
So, you can find me here on YouTube.
Yeah.
And then over here at Fundamental Trends if you want.
Okay. And I wish you luck on that trade.
Oh yeah, it's a pretty good diamond. So if nothing else, I get a diamond out of it.
All right, bro. All right.
All right.
Nice to talk to you, Kirk.
All right.
And
take care.
Follow Kirk on Twitter at Kirk Spano. Read his stuff on Alpha. He writes great stuff all over the place. Keep him in your intelligence gathering for his macros good. I just gave him a hard time.
No, hey, you know what? I have fun when we do these. And I was going through, just before we go away, I was going through the transcripts of like 10 or 12 of our interviews.
Yeah.
We've gotten way more right than we've gotten wrong.
Yeah. Yeah. You know, that's it's good. Yeah. We wouldn't be talking to you if we don't need any more contrarians. Contrarian indicators. So Good luck. Say hi to Shooter, and I'll see you down the road, buddy.
Yep. And thank you very much for Shooter. Just for folks who don't know, the guy who runs my trading room, I pulled out of ForexAnalytix. So, you guys have trained some very good people.
You pulled them out of the eagle's nest.
Is that where he came from?
Yeah.
Okay. Yeah.
Anyway, I'm glad it works. All right, buddy.
All right. Have a great Easter week. It should be exciting.
Yeah, we'll be. Chinese will be here, and all they're going to do is just verbally threaten, quote unquote, Kirk Spanos. Remember that.
Yeah.
Okay.
Eventually, Taiwan and China will be nice to each other.
I tell you what, I hope you're right about everything just working out fine. I'd be very happy with that. So thank you, buddy.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.